Scott Hoover. I'm with WeDoHardMoneyLoans.com, and I'm here to talk to you today about hard money. I've done a YouTube video or two in the past, and the last one I did a year ago was over 7 minutes long and had 4,500 hits, and I received a couple of good customers out of that. So that's what I'm attempting to do today, and educate you a little bit about hard money. My background is pretty much all mortgage banking. I've got 30 years experience. The last 10 years have been pretty much dedicated to private money, hard money, and real estate development. I am currently doing several projects in private and hard money, and I'd like to talk to you a little bit about what's going on in the market. Hard money is basically institutional or private individual money that is lent at a higher yield than what you would get through a conventional bank financing. What happens there is that a lot of people or a lot of investors cannot get conventional financing for a variety of reasons. The underwriting guidelines of the last few years have tightened up dramatically, and we're seeing investors and others look for additional financing where the hard money or private money comes into place. What we're seeing today in today's market is private money is basically used and categorized into a few different areas. And the most important part of it is what is the actual loan to value, or how much are they going to lend versus the value of the property. Most hard money lenders today will lend at 65% loan to value. So for example, if you have a $100,000 single family residence, the maximum they'll lend is $65,000. Hard money is restricted to investment property. Sometimes we can find loans that are available for consumers, but the funds have to be used for business purposes. But the majority of all business in today's market is for investors. You cannot live in the property. It has to be a rental home of some kind. And what I specialize in is single family residence, multi-units, and commercial properties. Again, what I indicated to you is that we're going to be looking at loans that are available today up to 65% of the value. Once in a while, we can go to 70%, but it has to be an exceptional piece of collateral, or the borrower has to be overqualified, or a variety of reasons. But what we see mostly is single family residence, purchase or refinance up to 65%. Now, why would somebody choose hard money in today's market where you're going to be paying 9, 10, 11, or 12%? Well, and the conventional financing could be somewhere between 4 and 5%, 3, 4, or 5%. Hard money really is predicated mainly on the collateral of the property. How much is it worth? Not the criteria leading up to it, not the credit of the borrower, even though that can be taken into consideration, not the reserves of the borrower, not the income that is reported, but actual collateral in terms of what it's worth versus what we're going to lend. So a lot of times the documentation is much, much less and can be done in a much more expedient manner than a conventional loan. Typically, our hard money loans take anywhere from a week to 10 days to 20 to 30 days. And that's another reason that we use it, is that a lot of our client base must close in a very quick time. And to do that, hard money is really the only available source. We don't have the same requirements for disclosures, even though we do have disclosure requirements. So let's talk a little bit about what's active today. We're talking about purchase money at 35 or 30% down. We're talking about refinance with cash out on any property up to 65%. If we go over $1 million, the loan to values drop, and we're looking more at 60% and not 65 up to $1 million. The market today has changed a lot, and the reason is real estate values have settled and have dropped from the peaks in 05 and 06 and have come back down. and have gone back up a little bit. And what we've seen is a lot of properties have come on the market in foreclosure or very distressed, and investors are now picking them up at a reasonable price, even though we're seeing that market somewhat saturated in the middle here in California in the $300,000, $400,000, $500,000 range. There's quite a few investors and fix and flip type investors who buy the property, fix it, and sell it. And so the competition for that real estate has gotten quite high. But what we're seeing is the fix and flip market, if you're interested, is really a good market to be into if you find the right area that you're looking for. I specialize mostly in properties over 500,000, and there is less inventory, but there is also more potential for margin, but you have to do your homework really well. So what typically will happen is that a client will come to me and ask, Scott, do you do hard money loans for fix and flip investment type properties? And of course the answer is yes. And here are some of the criteria. One, the property, when they purchase it, they have to put a minimum of 20% down. And what happens there is that, for example, let's say the purchase price is $1 million. So the borrower's got to come in with 20% down, or $200,000 plus closing costs. Then the lender will finance that along with the construction costs. So let's say it's $200,000 to improve the property. So they'll give them a total of $800,000 to buy it, $200,000 to improve it. The criteria, though, is pretty stringent on what the exit strategy is. The property has to be worth no less than, a 65% loan to value. So, for example, the property in this case is going to have to be worth somewhere in the range of $1.5 million after he bought it for $1 million and put $200,000 back into it. And if that's the case, the investors are willing to lend on that property. One, do they have the availability of funds? They want a certain yield, and they're going to want a certain amount of fees along with the fee I'm going to put in there. So what they're looking for is a piece of property that an investor will buy that's under market, that can come in, make reasonable improvements to the property, whether it be extreme cost of construction, like reconfiguring the property, or is it simply a matter of deferred maintenance and paint and carpet and landscape and windows and flooring, things like that, to improve the property, to bring it up to market speed. The other thing is they're going to require a pretty good exit strategy. So if you buy a piece of property from a bank or an investor or anyone that's under market, you better make sure that you know what your cost of construction is. You better know what your exit strategy is going to be. So it's important that you have done this in the past. Most investors or private money won't lend to someone who hasn't done this before. I'm happy to answer any questions or calls about it, but the reality is you have to typically have a track record. So what we're going to require, if you're a private investor, a private fix and flip guy, is we're going to need the name of your contractor. We're going to know how many times you've done a fix and flip. We're going to need to know your exit strategy in terms of who you're going to sell the property to, what the time you think it'll be on market, and then we're going to need a complete construction cost breakdown. Once we do that and we order the appraisal, the actual real value, or what the appraised value is going to be after you fix it, can be no less than, you have to have about a 35% equity position, or the loan to value can be no more than 65%. This is a pretty exciting market in the 750, 500,000, 750, and $1 million and above, because there's a lot more inventory and margin available, because most of those properties are still available and can still be purchased. But your exit strategy, your cost of construction, the right contractor, financing, is all going to be pretty much in place for an investor to take you into consideration and finance it. I think the opportunities are there in today's market for private money if you're interested. I'm available pretty much 12 hours a day, 7 days a week. My name's Scott Hoover. My phone number is 619-933-7085, and my email is r.scott.hoover@gmail.com. Give me a call about anything in terms of hard money. I will advise you that most hard money transactions need to be in a major metropolitan area or near one, and I will help guide you through it or direct you to someone who will, and I look forward to working with you. Thank you.